The only business budget you actually need. This is it. And yes, I have a free template for you. Most founders do one of two things with their budgets. They don't have one at all, running on gut feel and hoping it works out. Or they build a monster 14-tab spreadsheet, open it once and never look at it again. Both leave you flying blind. I've done both. I've built the 14-tab beast, color-coded, formulas everywhere, and never touched it after 1 week. The budget that actually changed my business was 1 page. And forget everything you feel about the word budget. A budget isn't a cage that tells you no. It's a simple plan for your money that lets you say yes or no on purpose. And in the next 10 minutes, I'll walk you through that 1-page budget in 4 simple parts. And you can build yours as we go along. So stay to the end for parts 3 and 4. The honest number almost every budget hides from you. Exactly how much revenue you need to actually pay yourself and turn a profit. And the 15-minute a month habit that gets you there. A budget that lies to you is worse than no budget at all. I'm Nyasha, a chartered accountant who's also built and run my own business. Let's build it. The money coming in is the very first line of any budget. And that's where most founders quietly lie to themselves. Your budget starts with expected revenue, month by month. Simple enough. But here's the trap. Founders budget the revenue they hope for, not the revenue they can actually defend. The dream month goes in the spreadsheet and the plan is broken before it starts. So use numbers you can actually stand behind. Your signed clients and recurring revenue first, then a conservative estimate for the rest based on your pipeline. Not the best month you've ever had, the month you'd better. A budget built on revenue you hope for isn't a plan. It's a wish with a spreadsheet wrapped around it. So do this. Write down next month's expected revenue using only what you can defend. Signed and recurring first, then a conservative guess for the rest based on your pipeline. Budget the revenue you can defend, not the revenue you're dreaming about. Everything else you build sits on top of this one number. Once you know what's realistically coming in, you need to know what it truly costs to keep the lights on. That's part 2. Here's how to work out what your business actually costs. And we're going to lay it out exactly like a real profit and loss statement. So we start with variable costs, your cost of sales. These are the costs that move with your sales: materials, delivery, transaction fees. The freelancer you only pay when work comes in. The key thing about them is they are basically a percentage of your revenue. Here's how you find that percentage. Take last month. If you did 10,000 in sales and 3,000 of it went straight out on materials fees to deliver the work, your variable costs are 30% of your revenue. So on the 20 or 30,000 of revenue you're planning, you'd expect roughly that same 30% to go out as cost of sales. That's how you budget for them, as a slice of revenue, not a fixed guess. Revenue minus those variable costs gives you your gross profit, the real money left to actually run the business. If that number's thin, no amount of budgeting will save you. The problem is your pricing or your delivery cost. Then come your fixed costs, your overheads, rent, salaries, software, insurance. These barely move whether you sell 10,000 units or none. And here's where founders get caught. The silent ones. The insurance that hits once a year. The pile of subscriptions. The annual renewal you forgot. So take every yearly bill, divide it by 12 and put it in every month so it never ambushes you. So do this. Work out your variable cost as a percentage of revenue. Last month's cost of sales divided by last month's sales. Then list your fixed overheads, dividing any annual bills by 12. Variable costs are a slice of revenue. Fixed costs are the price of just existing. Get gross profit right first. Everything downstream follows that. Now most founders stop right there. Income minus costs, and just hope that there's something left over. Part 3 does the opposite. It starts with what you want to keep and tells you the truth about your revenue. Here's where every other budget lies to you. It tells you to just pay yourself first, as if the money is magically there. So here's the honest version. Start with the truth. You've got your realistic revenue and your real costs. Subtract one from the other, and what's left is what's actually there for you right now. Your pay, your tax, and your profit combined. No pretending. Now set your target. And yes, as a percentage of your revenue. A common one, 20% to pay yourself, 20% to set aside for tax, 10% for profit. That's half your revenue you want to keep before a penny goes to running costs. Then just compare the two. If what's actually left behind covers that target, brilliant. You're funding your future. If it doesn't, and for a lot of founders it won't, here's the rule. Do not inflate your revenue to make the spreadsheet feel better. That's lying to yourself. And reality always shows up to collect. Instead, let the gap tell you the truth, exactly how much more revenue you need. And here's the part almost everyone gets wrong. It's not just the shortfall, because as revenue grows, both your target and your variable costs grow with it. So the real number is bigger than the gap looks. Don't worry about the math. The template does it for you. It'll say something like, you need 10,000 more in revenue, a 33% lift, or cut your costs by 3,000. That's the whole point of Profit First. It doesn't conjure profit out of thin air. It turns, I hope this works, into a real specific revenue target that you can work towards. So do this in the template. Put in your realistic revenue and costs. Set your pay, tax, profit targets, and read the revenue you actually need number. That's your target for the quarter. Profit First isn't a trick to find money that isn't there. It's the number that turns I hope into I need exactly this month. And then you go and get it. So now the budget has told you the truth, where you are and the revenue you're aiming for. But a budget sitting in a file changes nothing. Here's the habit that closes the gap. There's one simple habit that turns a budget from a dead spreadsheet into the tool that actually runs your business, and it takes 15 minutes a month. A budget is a prediction, and on its own, a prediction is just a wish. The magic isn't in building it, it's in checking it once a month. You put your plan next to what actually happened, line by line. Where did reality beat the plan? Where did it miss, and why? That gap between planned and actual, the variance, is the single most useful piece of information in your whole business. It tells you exactly what to fix while you've still got time to fix it. A budget you write once is a wish. A budget you compare to reality every month is a steering wheel. 15 minutes once a month, watching your real numbers catch up to your plan. That's the entire difference between founders who hit their numbers and founders who just cross their fingers and hope. So do this. Put a recurring 15-minute budget review in your calendar for the first of every month. Plan next to actual, line by line. That's the whole habit. Your budget doesn't work when you build it. It works when you check it. 15 minutes a month. That's where all the magic is. So there it is. Your one-page budget in 4 parts. Realistic money in. The true cost to operate. Profit first targets that tell you the exact revenue you need. And the 15-minute monthly review that gets you there. No 14 tabs and no lying to yourself. And the exact one-page template I just walked you through, it's absolutely free. Grab it in the description, drop your own numbers in, and you'll have your budget built today. Subscribe for more founder finance without jargon. I'll see you in the next one.